Got it.
Yay.
Okay. All right. Now
I'm going to let Karen introduce you, and I'm going to shush.
go ahead. Go ahead, Karen.
Perfect. Courtney, first of all, thank you so much for doing this. I've been so excited. And when I mentioned this to everyone, I realized you have a huge fan group within the U Life. So I heard about you first from Ray Higdon. He met with you just outside on a patio one afternoon, and I immediately bought this book, More Relaxing, Less Taxing. Read through it. It's all highlighted up and earmarked, and I love it. And I've shared it with people in this company. And then when you were on with him not too long ago, I got really excited and I took notes and I shared with this team, and they said, we have got to get her on. So thank you so much for doing this. I wanted you to tell a little bit about your story, just in a nutshell, because you have such a unique background that you went to school for tax and how to do taxes, and then you ended up in the network marketing world. And it's like those two combined made you realize how much you could help people in home-based businesses compared to just your regular accountant. Yes. So if you don't mind, I know you said you have a presentation, which I'm so happy because that means I'm off the hook, but I want people to hear your story. I think you're so inspiring. You make things happen. You have lots of kids, 6, is that right?
6, yeah.
Yes, that's amazing. I mean, I can't do much with 2. So I'm just inspired by you. And I want people to know you're a go-getter. You make things happen. You don't sit around and say, oh, I hope this happens. You go and do it. And you're just an inspiration to all. So just in a nutshell, 5 minutes of your story, how you got, even when you graduated from high school, because that's how I know most of your story is because someone was bullying you online. And I sat and listened to your a whole hour of you talking about your story. So share it with us, please. I'm going to mute myself.
Yep. Okay. So I'm going to share it and show you the slide so I can go through my story while I'm talking. And hold on just a second. Let me share my screen so you guys can see it. And, my name's Courtney Epps. I am originally from a very small town called Aner, South Carolina, and I live in Greenville, South Carolina, with my family. I have 6 children. So these are my children. My children are from 18 to 8. They're 18, 17, 16, 15, 13, and actually 7, excuse me. She's almost 8. She'll be 8 in November. So I'm an international speaker and an author, and I consider myself to be what's called a tax strategist. So I'm not a typical accountant. My job is to free up money and to find ways to help people keep more of their hard-earned money. And, that's what I love to do. Most accountants don't like to speak, and I love speaking. I'm a serial talker. And so if I could just run my mouth for a living, I would. And I'm working really, really hard and becoming a business owner to be able to do that. So I own an accounting firm here in Greenville, South Carolina. Actually, it's in Greer, and we have 25 employees now, so it's doing really well. And my biggest thing, and I'll share. I started college at 16. I graduated with a 5-year accounting degree by the time I was 20, so I have an equivalent of an MBA in accounting. And I really didn't want to be an accountant for the longest time, and it was very frustrating for me that people would come to me. I would save them money every year, try my best to save them money, but I couldn't really give them any sort of strategy because, I didn't really understand how the accounting world worked. We were doing taxes January through April. And, after that, it was like, there was no business after that. And, I really didn't understand. I didn't go to college and learn strategy. No accounting does. I mean, there's no accounting class that teaches strategy and how to save money on taxes. We're taught financial, to read financials. We're taught to, have conversations with people about profit margin. We're taught more about cost accounting than we are on anything else. And, so that was kind of my understanding of accounting, and I really hated it for a long time. And I had a business. Ended up, I worked for a really large CPA firm, just so you guys are aware, right after college and during college. And I ended up leaving that firm and tried to do everything but. So I've owned retail stores, wholesale companies. Then I got involved in an insurance agency that I ended up buying. And I took that from about 500 clients to 3,500 by the time I was 25 to 29. And I put it up for sale, and the guy I sold it to stopped paying me. And I lost everything I owned 10 years ago. But the biggest thing for me is that the fact of I was $250,000 in debt. I couldn't afford to file bankruptcy. And I just spent 100 hours a week away from my family, away from my children for the last 3.5 years. So that kind of destroyed me for a really long time. And luckily my parents got me involved in a network marketing company about 6 years ago. And that was really where I had my aha moment. I was able to see that I could help people. And somebody's not muted.
Internet.
So I don't know how to mute, but somebody. Yeah. So, okay. So really my aha moment, I got involved in that network marketing. Oh, I'm muted again. Can you
You're
hear
not muted, Courtney. We can hear you fine.
All right. It said I was muted. So, okay.
People keep jumping on. So like every couple minutes, I might just say, I'm muting again, and then just unmute yourself.
All good. All good. So anyway, I got involved in that network marketing business. And what I loved about it is that I did a tax return for someone in the company, and I was able to save them $4,100 more than they'd ever gotten back before. And so I didn't realize, because I'd been a business owner. I've been a business owner since I was 19 years old. So for 19 years, you know, I've not worked for anybody. I've not gotten a paycheck. Like I didn't really know what that looked like. And so I had taken for granted the fact that I had been claiming all these deductions, and I didn't realize how big of a deal it was to not be a W-2 employee, to be a business owner. And so I did this tax return for this couple. One was an engineer, one was a nurse, and I saved them $4,100 more than they'd ever gotten back on their taxes. And that kind of opened my eyes to say, man, having a home-based business is a huge deal, because they were not successful in the business that they were in. That, not to my determination, they were not. And so what happened is they got that money, they ended up buying the product, using the product for the first time, and then they hit the first rank of residual income in the company within a matter of a month. It was crazy. And so what I did in that company, which I didn't do it for tax purposes, I did it to sell network marketing. Why people would be brain dead not to be in network marketing. And I had no idea that it was going to turn into what it is today. But I did over 900 tax returns for people, and I would show them where they would have been had they not had their home-based business, and where they were having their home-based business. And I found that I could save people between $4,000 and $8,000 a year. And that is life-changing for people, you know, and I'll share with you why in just a minute. But, you know, I want you to first understand that there are two tax systems in our country. There's one that was created to steal wealth away, unfortunately. That was the W-2 employee system. And please understand, I'm not in any way knocking W-2 employees. I need you to understand you will pay more in your lifetime in taxes than food, clothing, housing, and transportation combined. Let me say it again. As a W-2 employee, you will pay more in your lifetime on taxes than you will on food, clothing, housing, and transportation combined. We consider, and Robert Kiyosaki actually says this, that W-2 employees live off of 50% money, meaning that they only bring home and keep 50% of their money. The rest is going to pay taxes. And so when you understand that, most people don't understand why. I'll explain it to you. The second tax system was created to provide wealth for you. That tax system is for the business owner. And it doesn't matter how big you are. It doesn't matter if you just got started in business, you have a home-based business, or if you're Amazon. There's no difference in tax code. So you get the same benefits as Amazon does. They just need more tax strategy along the way. So here's the thing. The second system is the business owner system. That was created to provide wealth. What it does is it allows you to buy your needs and your wants, and most of those can become tax deductions, and then you pay taxes on the difference. And the reason why is because we're growing economy. We're continuing to sell and sell and sell and bring money into the economy and push money out into the economy to buy more things for our business. And Congress expects that one day that we'll get big enough, you know, hope to God that we get big enough that we'll hire employees. And they realize that 75% of small to medium, or 70% of employees are created from small to medium sized businesses. So it's so funny, like people tell me every single day, they're like, you know, when I was in network marketing, home-based business is not legitimate. Like, you know, you can't make money having a home-based business. Well, let me tell you, Amazon started in their garage. So did Google, and so did Microsoft. So at the end of the day, and Apple, I mean, for that matter. So, you know, at the end of the day, those companies were home-based businesses at one point in time, and they grew. And had they not had the massive tax advantages that they were able to take advantage of, they wouldn't have been able to grow a business. They wouldn't have been able to hire employees. And then someone pays the taxes, so the lion's share goes off to the employees. So when you understand that, you have to be brain dead not to have some sort of home-based business and stay in long enough to win. So what I started doing 2 years ago, I heard some statistics that hit me really, really hard. Grant Cardone said those on a webinar, and I listened to them, had to go look them up, and I transformed, I changed, I shifted, I did a 180-degree turn on my accounting practice, and I went from being a fractional CFO to a handful of companies and started sharing tax strategy and to thousands of people. And so those statistics are that the average household income in America makes $60,000 a year. So a family of 4 is making 60 grand a year. They're paying $14,000 in taxes. Their take home from that is $46,000. So 60 minus 14 is 46. And guess what, guys? The cost of living in America on average is $53,000 a year. So the average American household is going in debt $7,000 a year to work 40 hours a week, 50 weeks a year to take 2 weeks paid vacation. And that's sickening. And here's the thing. I knew when I heard those statistics that I could change the world with it. I knew that I could help people because I'd already done 900 tax returns and showed that I could save people $4,000 to $8,000 a year. So it had already been over a year since I'd been involved in network marketing, hadn't even thought about it. And I stopped dead in my tracks. I pulled my car over and I said, you know what? I know exactly what I'm supposed to do. I know what I was put on this earth to do, and it is to help attract more people into the home-based business industry, help them keep more of their money so they can stay in long enough to win, and teach them how to keep more of their hard-earned money when they make it. And so I'm a huge advocate for the network marketing industry. I will tell you that. I'm not involved in network marketing, never will be involved in network marketing again, but I do truly believe this industry is for everyone. And the reason why is because the average person, 46% of Americans don't have an extra $400 to their name. And that was before the pandemic. And 69% of Americans don't have an extra $1,000 to their name before the pandemic. Okay, so that means that half of every person that you're sitting down from is, if they miss one paycheck, there's no end in sight. They're not going to make it. But you have the ability to share with them the information that I'm going to share with you today and help them free up $400 to $700 a month. You can change their life. And I will tell you this, 70% of all homes could have been saved in 2008 had someone had an extra $300 a month. So when you have a conversation with someone to talk to them about this business, or you're scared to have a conversation with them to talk to them about this business because you don't think they'll have enough money, or you don't think that they'll be great, or you don't think that, you think they'll reject you, stop it. That's being selfish. You have to share with people this information, and you have to allow them to have the education, because people don't know this information. People don't know that they can actually save money by having their own home-based business, using their living expenses and being able to direct those into business expenses. So here's those statistics. And I made it easier because I didn't want people to see that they're really going in debt $7,000 a year. So I broke it down a little bit and took the cost of living and dropped it some for a single person. So I showed you a single person and a married person, the $60,000 income. Here's the standard deduction. Here's the taxes, take home, cost of living, and here's what's left over. Nothing. Okay, nothing. So here's what happens when you become a W-2 employee with a home-based business. Okay, it doesn't matter if you make money. The fact is that you need to attempt to make money. Now, please understand, I am not telling you in any way to go out and join a business, join a network marketing business, pay to sign up, and never do anything and expect that you're going to get massive tax deductions. I'm telling you, you need to attempt to earn an income. But first, we need to understand what a tax deduction is. So a tax deduction per the IRS, this has nothing to do with income. It doesn't matter if you make money. What matters is that you're attempting. So the IRS determines a tax deduction to be any expense that's incurred for the purpose of gaining or producing income, that's incurred with a reasonable expectation of resulting in future business, and is reasonable under the circumstances. In layman's terms, that just means if you're attempting to earn income either today or in the future, and it's reasonable, it's tax deductible. Now, is it reasonable to think, here's the thing, We have a business mastery class that I'm in right now. It's 10 grand. That class is $10,000. So I'm here with you guys. I've got 9 of my staff members in that event. It's typically 10 grand a person. Luckily it's virtual, so I had them all here anyway. And so that $10,000, it's reasonable to think that I'm going to build my business and grow my business in the future because of the things that I learned from that. So it's reasonable to think that that is a tax deduction. Here's the great part. The things that we are spending, that you guys are spending on a daily basis, can now be redirected into from living expenses into business expenses when you do something called daily business building activities. So the IRS says that you've got to put forth 3 to 5 hours a week for 45 minutes a day, attempting to do daily business building activities. That means just opening your mouth, in the network marketing industry anyway, that means opening your mouth, telling people what you're doing, or texting people what you're doing, or messaging people what you're doing. So you just have to be attempting to earn an income is what that means. So here's what happens. When you're a W-2 employee, we all have living expenses. So we all have these same expenses. We have living expenses and we have something called itemized deductions. Well, here's the thing. Most people think that they're getting some sort of benefit from mortgage interest. I'm gonna buy a house, I'm gonna get benefit from mortgage interest. 96% of Americans do not, okay? And the reason why is because they don't go above the standard deduction. The standard deduction is $24,000 a year if you're married, and it's $12,000 a year if you're single, okay? So mortgage interest can be a tax deduction. Then you have things like real estate taxes, property taxes, sales tax, income taxes. Those are capped at 10 grand. So the max, even if you had $30,000 or $40,000 a year in taxes, you still can only get 10 grand. Then you have medical bills and medical insurance. So medical bills are, here's the problem with medical bills and medical insurance. After you make more, the more and more money you make as a W-2 employee, the less that you actually get to take as far as deductions for medical bills and medical insurance. You're required to go above 7.5% of your AGI in order to get any benefit, meaning that if you made 100 grand a year, 7.5% of that is $7,500. If you had $10,000 in medical bills, you could claim $2,500. It doesn't seem logical to me. So you've got those, the medical bills, medical insurance, you've got the taxes, you've got the mortgage interest, and then you have charitable contributions. So if you combine all of those together with the caps and you go above $24,000, you get to take advantage of whatever that increase is. Well, here's the thing, regardless, you missed out on $24,000, but there's a way to get them back when you become a business owner, at least part of that. Now, living expenses. None of these are tax deductible if you're a W-2 employee. And we all have them. We have meals and auto expenses and cell phone and travel. And we have, products that we buy and personal growth and development sometimes, and office supplies and home expenses and all that good stuff. So here's what happens. The minute you decide that you are a business owner and you attempt to earn some sort of income, now medical bills can become 100% tax deductible. And now on the right side, you'll see the number, the amount. These are not minimums or maximums. They're just averages that I typically see. Okay. So, whatever you actually have in expenses is what you should be claiming. And here's one caveat. I want you to understand, do not be concerned about writing off expenses that you actually have. Your expenses have nothing to do with you being audited. Nothing. Okay. So Sandy Botkin, lower your taxes big time, IRS attorney, CPA. He worked and trained IRS attorneys for 5 years. I learned that tidbit of knowledge from him. Had no clue. I thought the same thing you did. So I just want to share with you, that is a myth. That's not true. Medical bills can be written off 100% as a tax deduction for your business. If you hire your spouse and pay your spouse, you can create a fringe benefit for your spouse that covers medical bills. So they can pay the medical bills, you can reimburse them 100%, and that becomes 100% tax deductible as a business expense. That's a huge deal, guys. So medical insurance is 100% tax deductible when you are a business owner. The only caveat on that is you cannot have insurance through your employer. If it's outside your employer, then you can write off the medical insurance as 100% tax deduction. And so then we have things like property taxes. So Kelly was just talking about the fact that she just bought an RV and that they are going around the country. We just bought a toy hauler, it's about $68,000, and we had to buy a $70,000 truck to go along with it, 100% tax deductible. We have things like property taxes. Property taxes are tax deductible for us. So things like for RVs, for trucks, for any sort of equipment that you would have. Also, a portion of business use of your home would cover property taxes. So things like that. You know, business use of home, that's a huge deal. A lot of people think that this can trigger an audit. In 19 years, I've never had a client audited for business use of home. So I just want to share that with you. And this was actually created, this tax code was created for business use of home for doctors who worked at hospitals and had nowhere to go to have their office. So they had to come home, and they considered it what's called a home administrative office. So this has actually been part of the tax code for a very long time. Never seen anybody get audited because of it, just so you're aware. And in 19 years, I've had one client audited. And so many people are like, you know, if you claim business use of your home, it's definitely going to happen. Well, 75% of our clients have business use of home, and one has ever been audited, and they were a hairdresser, didn't have business use of home. So that being said, on business use of home, you can claim a portion of your repairs, and maintenance, your property taxes, your insurance, your interest, the mortgage interest on your house. You can depreciate the home. You can depreciate the furniture in the house. You can write off a percentage. If you are using your home office, 100%, like anything that's inside of it can be 100% written off as well. And one of the things that most people don't realize about business use of home is you can actually get rid of, as far as your square footage. So you determine business use of home percentage by the square footage of your office divided by the total square footage. Well, you can back out of the total your hallways, your hallways and your closets and your common areas. So all that can be actually backed out of the total square footage, increasing your business use percentage. So that's a huge deal. And then charitable contributions, we're going to talk a little bit more about those at the end, but I love charitable contributions. It's my favorite tax deduction. What happens is you can actually give from a gross income level instead of a net income level. And because of the way that you give, it becomes a part of your business model. You can actually write off charitable contributions as a cost of goods sold item. And there's a huge reason why that's very beneficial, because it becomes a business tax deduction as opposed to flowing and becoming an itemized deduction, which again, 96% of Americans get no benefit from. So here's the thing. I pick up the phone and I call Karen and I say, Karen, you know what? I've got something I'm super excited about. I want to share it with you. Let's go to lunch tomorrow. And Karen says, okay, that's fine. She's my friend anyway. We're going to have a conversation. And so I get in my car. One, I get to ride off my house because business use of home, I'm using it for business purposes. I get in my car and I'm able to write off 58 cents a mile for every mile that I drive in my car. Now, you can also depreciate your car depending on the business use percentage, and we'll talk about that in just a second. But for all intents and purposes, let's say that I'm doing this on a part-time basis. I just started my business and I call up Karen. She's my friend. We go to lunch. I get in my car. I drive to her. That's 58 cents a mile that I can write off. Now I sit down and have a conversation with her and I say, Karen, I'm super excited about this, blah, blah, blah. I'd love for you to be a part of it. And she says, you know what, Courtney, I am all for it. I love what you're doing. I want to be a part of it. I want to be in the business opportunity. I love the product or service, and I'm all in. Or she may say, you know what, Courtney, I love the product or service, but I'm not interested in making money. Okay. Or she may say, you know what, Courtney, I think you're crazy, and I think you may be going to hell or jail. I don't know which one yet, but I think you're going to, maybe both. And I'm going to look at her like she has two heads. Because see, here's the thing I know, and this is one thing I want you guys to understand. This is all about certainty. And if you are certain that you've made the right decision, your friends will know that you've made the right decision. And something like that would typically turn someone off or upset them and say, you know what, I'm never going to talk about this again. It would destroy most people if someone told you that. But for me, I'm certain that the number one thing that you can do for financial freedom, if you want that, is to find a home-based business, join it, attempt to earn an income and save money in taxes, and then start making money along the way. I know that without a shadow of a doubt. So I'm going to look at her and say, Karen, you obviously don't understand. I was just trying to show you a way that you can not only make some extra money if you wanted to, you could also buy some amazing products along the way at wholesale, and a way for you to potentially save $4,000 to $8,000 a year for your family. So I'm not sure what part of hell or jail that is, but at the end of the day, that's all I was trying to do. So, and because I had this conversation with you, guess what, Karen? I got to write off 50% of my meal because I had a conversation with you and told you what I was doing. I get to drive back home and I'm going to write off 58 cents a mile on my way home. And I was able to write it off on the way here too. And then when I get home, I get to write off my business use of my home, because the thing is I need that to run my business. And guess what? I needed my cell phone too. So I called you on it. So that's a tax deduction. My internet is now a tax deduction. Guess what? I get to travel all around the world and do the things that I want to do with the people I want to do it with, like-minded people who want more in life than what I have right now. And guess what? That's a tax deduction. And I get to hire my kids. And here's the thing, there's numerous fringe benefits, and I'm able to write off my swimming pool because I hired my kids to work for me. And because I did that, I bought a pool, and I allow my employees, who are my children, to swim in my swimming pool, and that's 100% tax deductible. I now get to take my children with me to go to continuing education events, so they get the skills and the tools that they need in order to build their business, in order to be successful one day. And all of that is tax deductible. And that's all I was trying to share with you. So on top of that, guys, office supplies are tax deductible. Legal and professional fees are tax deductible. So, continuing education, like, changed my entire life. My 2 children, actually 3 of my 6 children right now are listening to Tony Robbins in Business Mastery. Like, they have a completely different mindset than any other children that I know, because they have been engulfed in what I'm doing on a daily basis, and they get to see what I'm doing. And that is powerful. It really is. So all of these things, I can tell you right now, none of these are extra expenses. These are things you're already going to spend money on anyway. Now, here's some extra things like you may spend money on advertising for your business, but you don't have to. I have not spent $1 on marketing or advertising since the day we started, since the day I actually attempted to earn income from my accounting practice, which I started back about 3 years ago, really focused on building that. The continuing education is life-changing. I don't know of any other industry. And I'll tell you this, I'm a platinum partner with Tony Robbins. I spend $85,000 a year plus $40,000 in travel to be around the right mindset of people, okay? You guys in network marketing, it typically costs a couple $100 to be a part of a continuing education event. And there are people there that are willing to help you get to where they've gotten because they financially benefit from you. That is the smartest thing that a company could ever possibly do, is to allow people that financially benefit from you, help teach you how to become better. See, that doesn't exist in the real world. Over here in the traditional business, nobody is teaching me how to become a better accountant or how to become a better leader, because no one is financially benefiting from me. And that's the difference. That's what I love about network marketing. So continuing education events are a place to see people that are at a level above where you want to be, and allow you to strive to be better. And if they have gotten there, you can get there. I just know that. So you just have to know that you can do it. So I love continuing education. It changed my life forever. Dues, you may have company dues that you have. So monthly membership dues, that's a tax deduction for you. And then you have things like cost of goods sold. See, people are typically buying products anyway. The only difference is when you decide to join a home-based business, now you get access to cost of goods sold. So you can write off the products if you are truly using those to share with people to attempt to earn an income. So if you're doing before and after pictures, or you're posting blogs or conversations and telling people what the products are doing or the service, then yes, it's a tax deduction for you. If you're selling product or giving away as samples, then it's also a tax deduction. And guys, you can see there's only a couple $1,000 that I put for extra expenses. You can see that these are minimal, like $35,000 worth of tax deductions that you're entitled to take by having a home-based business. And so they're not extra. And so many people think that they have to spend a lot of money in order to make a lot of money. And that's what keeps them broke. That's what keeps them where they are today. And so we want to help them get out of that. So here's what happens. I want you to see this. And I didn't use the $35,000 number. I used 25,000. What I typically see is between 20 and 25,000 minimum for people to have in tax deductions on things they're already spending money on. So living expenses. So we take the 60,000 income. We're going to say, for this sake, no extra income was created from a home-based business. Like, you just may suck at telling people what you're doing or sharing how you're doing it, but you are attempting to earn income. So here's the business expenses. We just use 25,000. Here's the taxable income, the taxes, the take home, the cost of living, and here's what's left over. Guys, just by attempting to earn an income 3 to 5 days a week, 45 minutes a day, doing daily business building activities, this same scenario person is saving $5,600 a year if they're single, and $4,500 a year if they're married. That would be the equivalent of making an extra $3.79 an hour, or $3 an hour if you're married. See, and you got to work 2,000 hours in order to get that money back. So all you have to do is join a home-based business, talk about something you're passionate about and you want to share with people, whether you're successful or not, attempt to earn income, tell them about it, and now get tax deductions. Well, here's what happens. And this is what I know. The more that you attempt to share this with people, you will eventually make money, because you will eventually get good at it. That it happens. Okay. So luckily, I get to see it on the outside. I get to see clients who who make nothing in network marketing, who just got started. And I have clients who make $17 million a year in network marketing. And I've seen clients just this year go from making $300,000 a year to $100,000 a month. I've seen clients go from making, $500 a month to $10,000 a month. So, I mean, it is possible. I see it every single day in these people's financials, and it's amazing. I love it. So if you start making an extra $500 a month just off the business, guess what? You don't have to pay any taxes on that money. And the reason why is, on paper, you show a loss. And so many people think that they're losing money by having their home-based business, and they don't realize they're saving so much money in taxes, because any loss that you show on paper, it's not necessarily a loss. You're just now able to write off all these expenses. Well, guess what? Any loss goes against any income that you have, and now you're paying less taxes. So here's this scenario: taxable income, the taxes, the take home, the cost of living. Here's what's left over. You're now in the positive. So if you're single, it's $10,500 difference in take home pay. Okay, married is $9,500 a year, so you'd have to make an additional $7 an hour, or $6 and some change, in order to have, in order to get to a point where you're bringing home the amount of money that you would make by having an extra $500 a month. And here I want to bring this home for you. We'll talk about a couple other tax deductions, and I don't know how much time we have, but I want you to understand this. I had a client. Okay.
People can hang up, Courtney, whenever they want to hang up. You can talk until, September.
Okay. So I had a client that came to my office, couple, last year. One made $85,000 a year, and the other made $55,000 a year. And so combined, they made $140,000 a year. And I think this is super powerful for people, because 40% of every person who made under $40,000 a year lost their job this year. Okay. So this has impacted a lot of people. So they were making $140,000 a year, husband and wife, and they'd gotten a $35,000 pay increase, and they wanted to know how much money it was going to cost them in taxes. So they wanted to make sure that they were, weren't surprised when tax time came. And so we determined that out of the $35,000, they were only bringing home $13,000. They were paying an additional $22,000 out of that $35,000. And so while they were there, I said, you know what, let me just figure out how much money you would need to make in order to stay at home, or how much money is this $55,000 a year actually generating for you? Because they wanted to have a child, and they wanted to be able to, one of them wanted to be able to stay at home. So we left the $85,000, we took away the $55,000, and what happened is we determined that she The $55,000 a year was only generating an additional $1,800 a month into their household. That was $21,000 a year. They were paying an additional $34,000 a year in taxes for her to work. When you understand that your taxes are the number one thing that you have to get a handle on, and when you realize that if you do have two W-2s in the household, that one of you is almost always better off to stay at home, things will change and shift, okay? I'm not telling you to quit your job. That's not what I'm saying here, but I want you to understand. I told her, I said, you would be better off making $1,000 a month in any home-based business, any, I don't care what it is. Go make $1,000 a month. You don't need the $55,000 a year paycheck. That $1,000 a month will actually generate for you about $20,000 to $25,000 a year in a tax deduction. So you'll pay nothing off of your $1,000 a month in taxes, no FICA, no federal, no state taxes, nothing. Okay. Now you have a loss on paper of $13,000. You can offset that against your husband's income. That puts him in a lower tax bracket. Now you're bringing home more money than you would have generated with the $55,000 a year paycheck, and you can stay home. You can spend time with your family. You can do the things that you want to do. You don't have to pay for another vehicle. You don't have to pay to go out to lunch every single day. And at the end of the day, when she did have children, she could actually spend time with them. And there's a big difference between building an income and working in an office 40, 50, 60 hours a week, and building an income working at your home with your children 40, 50, 60 hours a week, even if it's the same amount of hours. So I'll get off my soapbox on that, but I just wanted to share that. So a couple things I want to go into detail on are just vehicle deductions, because this is a huge deal, and I'll explain, just give you some examples of me. And guys, what I'm sharing with you, this is stuff that I do. Like, this is things that I've done for the last 19 years. This is not coming from a textbook. This is coming straight from Courtney. I built my home-based business. I built my last accounting practice from home for the last 6 years. And so I was forced by code enforcement to move out of my home in September with my 13 employees. They told me I could not have that many employees working from my house, and I didn't understand it. Like, it was not fair to me. Fortunately, we moved into a really big facility. We've got, 6,000 square foot facility here, and it was time, but I wanted to be home with my children. So I want you to understand, like, these are not concepts. This is stuff that I've done for the last 19 years of my life. So anyway, standard mileage rates, 58 cents a mile. It's considered the shortcut method. You can claim mileage as, but you can't claim anything else. So, anytime there's a shortcut involved with the IRS, it's going to hurt you. So, and the reason why I say that is because you can't claim gas or oil or repairs, and there's no depreciation. Now, there are some people that are much better off to claim mileage, and we can determine that for you. If we become your accountant, we can obviously determine that for you, but I can send you guys a deduction spreadsheet that I created that can help as well. If you don't use us, you don't have to use us. So here's the thing, 15,000 miles, 58 cents a mile, that's $8,700 in a tax deduction for you. Now, if you bought a vehicle after January 1st, 2018, I don't care if it's new, it just has to be new to you. It's almost never a good idea to use this under the new tax law. And the reason why is because some massive changes happened in 2018, and it became very beneficial to take business use percentage and claim actual expenses of the car. So in order to claim the actual expenses, you first have to determine what the business usage is. And it's the business miles divided by the total miles. That's your business use percentage. So if we had 8,000 miles for business, 10,000 miles total, the business use percentage is 80%. So 80% of car washes, oil changes, repairs and maintenance, supplies, interest, all of those are tax deductible, as well as your gas. And so you would take, let's say we had 12,000 actual expenses, 80% of that, that's $9,600 in a tax deduction. So huge deal. Now, but you also get depreciation. So I'll give you an example. We bought a Suburban last September, October maybe, and that Suburban was $65,000. Well, there's part of the tax code that says if you have a vehicle that's over 6,000 gross vehicle weight, and you can Google it if you want to buy a vehicle, if it's over 6,000 gross vehicle weight, you can actually write off 100% of the vehicle in the first year that you buy it up to your net income from your business. So for me, that car, that Suburban, was a $65,000 tax deduction last year. It saved me about $28,000 in taxes, that one thing. Now, no, I didn't have the money to pay it in full. I signed my name to the bill of sale, okay? I don't even think we put a down payment on it. And because of that, I got a $65,000 tax deduction. December 31st, I bought a Cadillac XT6. That is under 6,000 gross vehicle weight. And so there's some luxury limits that apply if a vehicle's under 6,000 pounds. Prior to 2018, it used to take 18 years to write off a $50,000 luxury car. Now it takes 5.3. And so the rates for depreciation increased 3 times. And so, you know, what's great about that, and I want to explain to you, is that in 2017, December 2017, I bought a BMW, and it was 535i. And nobody told me tax laws were going to change. Even accountants didn't know. So here's the thing. I was able to take an $11,160 deduction that year on that vehicle. The next year, as you can see, year 2, I was able to claim a $5,100 deduction. So that was in 2018. 2019, which was last year, I would have been able to claim a $3,000 deduction. So on December 31st, I weighed the odds. Would I rather take advantage of a $3,000 deduction, which I was getting already because I had the car all year, or would I rather take advantage of a $10,000 deduction? And so I got the Cadillac, and I was able to take both, and I was able to get a $10,000 deduction on December 31st. Plus, because I bought it for the end of the year, that's just like getting married. If you get married the last day of the year, you're considered married all year long. So I was able to get a $10,000 deduction on that. And then the very next day, which was January 1st, 2020, I'd already started out with another $16,000 deduction. Yet again, I did not have to pay anything down on it in order to get the benefit. I just had a bill of sale, okay? Same thing. Kelly just talked about having an RV. We just bought a toy hauler. My intent of buying that toy hauler is to travel all around the country, and I have a ramp on the back of it, and that ramp turns into a party deck. I'm going to be doing tax strategy sessions on that party deck, and I'm going to invite people wherever I'm going. Now, along the way, I'm going to have a lot of fun with my 6 children, and we bought 4 ATVs, and we had to buy a dually to drive the toy hauler around, and we're going to do a lot of fun things. But guess what? When you mix your pleasure with your business, business trumps, and the business becomes a tax deduction for you. So that toy hauler is going to allow me to travel all around the country. I'm going to save money because I'm not staying in hotel rooms. I can take my family with me, and I'm going to build my business along the way. I'm going to see my clients. I'm going to see potential clients. I'm going to do tax strategy sessions. I'm going to do tax presentations from the back of my toy hauler, so on my ramp. So, you know, there's lots of ways to bypass taxes legitimately, morally, and ethically. And so a lot of times I tell people that it doesn't make sense to them, and I'm like, it should make sense. If you save money, you're going to pay taxes. If you spend money on your business, you're not going to pay taxes. Either way, it helps the economy. Okay, so I just want you to understand that. Now, hiring your kids. This is a huge deduction. You can hire your kids to do anything for you. And somebody is unmuted, but you can hire them to do things for you, and then they can pay for their stuff. So here's what happens. I have children who are personal assistants for me. I have children who go with me to every single event. At least one of my children goes with me to every event, and we do stuff on the front end and on the back end so we can enjoy each other. But they also are helping me build my business. They're helping me sell books. They're helping me talk to people. You know, I have my daughter, my 18-year-old daughter. She will be a junior in college when she starts in January at Clemson. She's taking a semester off to work for us full time. And she also owns 10% of our company, which was a way to shift income off to her, and which is really cool. But she is a tax preparer. She's the most amazing tax preparer that I have, and she's worked for me for the last 2 years. So you can hire them. They can clean your house. They can help you set up events. whatever you want to hire them for, as long as if you pay someone else to do it, you can pay your children to do it. You can also pay them to do things like modeling. So if they're under the age of 7, it's actually been held up in court at precedent at age 7. You can hire them younger if you want to. The only thing you need to do is to move money into their account from your account. You need to show that, and it doesn't matter what happens to the money after that, but you do have to set up payroll for them. So you have to process payroll tax returns every quarter. So I just want you to understand that. But here's the thing. The first $12,000 a year, you can pay them and they don't have to pay taxes on it. Neither do you. It's a tax deduction for you. So you can pay them even more than that if you wanted to. It's called income shifting. You're shifting income off of yourself at a higher tax bracket and putting it on your children. The first $12,000, they don't have to pay taxes on because of the standard deduction. If they're under the age of 18, there's no unemployment taxes, no state and federal taxes, and no FICA taxes for you or the employee. So that's a huge, huge deal. So hire your kids, because they are expensive. Here's the last thing I want to go into detail on is social giving. So social giving is a way to combine your passion and your profits. And here's the thing. This changed my entire business 2 years ago. So we created something called a social business, because I truly believe if you help enough people get exactly what they want, you'll automatically get what you want. And, I've lived that my whole entire life. That's why I'm here today. Like, nobody paid me to be here. This is my own free time, because I need to provide this value. I need to provide the education. I need people to understand it, so that if I help more people, some of you will become my clients because I helped you. And I know that. So it's pretty awesome. But here's what social giving does. It changes everything for you. So it allows you to give from a gross income level, which is a huge deal for tax deduction. What happens is that it becomes a business model. And so you can either do it for every dollar that comes in, for every $100, for every 1,000. It could be for every product, every service, every customer. It doesn't matter. It just needs to be a part of your model, and it needs to come from your gross income instead of your bottom line number. And what that means is that then you can write off that giving as 100% cost of goods sold item, instead of it being a charitable contribution. So that makes it 100% business tax deductible, which is a much bigger deal than it being flowing to your itemized deductions. And here's what we have done. We give to 3 nonprofits. The first one that we started with April 16th of 2018 was that we provided, for every dollar that comes into our accounting practice, we provide a serving of whole food plant-based nutrition to children in need. And guys, I'm not telling you to do what I do, but we give 16% of every dollar that we make away. I figured up today that I give away twice as much as we actually bring home, because it's important to me. So it's something that I have to do. And by doing that, we've been able to feed, it's now 2.5 million servings of food to children. But, as of July 29th, we were currently providing servings for 7,800 children a day, every day. And, that's very important for me, because every 6 seconds a child dies of malnutrition. And I had to figure out a way that I could connect my passion and my profits, because at some level you just run out and you say, I don't need to make any more money. And this is not about money anymore. This is about giving back. So, not only are we providing nutrition for almost 8,000 children a day, we are freeing a child about every 3 days from sex trafficking through Operation Underground Railroad now. We are providing safe drinking water to 53 people a day through a nonprofit called The Last Whale. And that changed everything for us. It allowed our customers, it allowed our partners, our business partners, it allowed, our employees to get on board with something so much greater than making money. And, I just think it will skyrocket your business if you put forth the effort to figure out a way that you can give, plus it's going to save you money. Now, when you start making money, how do you keep it? Here's the biggest thing I will give you. And if you don't take anything else from me today, when you get to a point that you're making $1,000 a month, get an LLC, okay? The reason why is because an LLC will allow you to treat your business as one of 2 things, either a sole proprietorship, if it's a single member, a partnership, if it's a multiple member, and so either one of those things. And so you have this LLC. Or you can treat your LLC as an S corp election for tax purposes. And what that means for you, biggest thing you need to understand, is it allows you to bypass 80% of your self-employment taxes. Meaning that if you are, so when you're a business owner, you make money, you have expenses that you deduct from that. So let's say you made 100 grand, you have 40,000 in expenses, what's left over 60,000, and you pay taxes on that. So you pay federal and state taxes, but you also pay self-employment taxes. So self-employment taxes are the employee FICA taxes, which are 7.65%, and the matching employer FICA taxes. Well, when you own your own business, you pay both of those. The difference is that employees pay it on their gross income, what they bring home. Employers, or business owners, they pay self-employment taxes on what's left over. Okay, so it's a big difference there. Even though you're paying a little bit more percentage, you're still paying less in taxes. But here's the thing, you actually can bypass 80% of that. Instead of paying $9,000 in self-employment taxes on 60 grand, which is 15.3% times 60 grand is 9,100, you would pay about 1,800 if you have an LLC treated as an S corporation. Now, in order to get an S corporation, you got to have either an S corp, which costs a couple $1,000 to set up. Don't want you to do that, and that takes an attorney. Nobody wants to deal with that. You can have an LLC, and the day that the LLC goes into effect is when the clock starts ticking. So if you come back to me and you say, Courtney, I completely forgot that I needed to be an S corporation, then I'm going to say it's okay as long as you had an LLC, because we can go backwards. We can actually go backwards 3 years and 75 days from today and treat an LLC as an S corp election. So if you overpaid in taxes because you didn't know that information, and most people do not, then we can go back and get that money for you. So that's a huge deal. I want you guys to understand. So in summary, there's never been a better time to have some sort of home-based business. I don't care what that is. I don't financially benefit from any network marketing business. I don't care if it's product-based. I don't care if it's service-based. I just want you to attempt to earn an income in some sort of home-based business to guarantee yourself $4,000 to $8,000 a year in tax savings. What I also want you to do is that you should be taking advantage of the tax deductions that you're entitled to take advantage of, okay? I want you to not be scared that you are going to get audited because your expenses have nothing to do with you being audited. What triggers an audit is typically when somebody tries to prepare their own tax return, they check a box incorrectly, and it forces them to be audited for that one thing, or there's a question that pops up, and then what happens is if you have a business, then you get audited. It's not the other way around. Okay, the IRS is super busy, and right now things are crazy. So, you know, they've actually have said just this year before the coronavirus hit that unless you made more than $500,000 a year or you were in poverty level, your chances of the likelihood of you being audited is nothing. Like, it's just really, really small. So hire your family, hire your spouse and kids, and that definitely can trigger some massive tax savings along the way, and fringe benefits as well. And things like, you know, I talked about the swimming pool. I know people ask me this all the time. There's actually part of the tax code that is a fringe benefit. It's actually in my book, More Relaxing, Less Taxing, so that you can provide a golf course, a swimming pool, a tennis court, or an athletic facility for your employees. And that is a fringe benefit for you. So I have an athletic facility here for our staff. I have a pool at my house, and I have a full-time nanny, a full-time housekeeper now, and I have 6 children, and so they all work for us. And because of that, I'm allowed them to swim in my swimming pool. And guys, I want to share this with you. So I had nothing 6 years ago, nothing. I was broke, and I was broken. And the network marketing industry brought me out of it. I made $9,000 in 2014, the whole year in accounting. I want you to understand that. $9,000. We're on pace to do $2.4 million this year. My life has drastically changed because of the network marketing industry. I was able to gain the support of people who wanted me to thrive. And I was able to build my accounting firm back up through the network marketing industry. That's why I'm a huge advocate for it. So when I tell you that I bought all these things, it is not because I had a lot of money beforehand. I didn't have a lot of credibility either. I lost everything I had. I was $250,000 in debt. I could not afford to file bankruptcy. Okay, that was my story. That was before network marketing for me, and I had a 5-year non-compete in the entire state of South Carolina for anything involving insurance and accounting. Everything that I knew how to do, my whole entire joy was gone. Everything was gone for me. And I was able to build that back up. So although I'm not in network marketing, this is what I do every single day, is I'm here for you to help you grow your business and help you understand how amazing it truly is. And if I didn't have this mission and this calling to help people understand the tax code and keep them in long enough to win, I would be doing this right along with you, because it is a lot more fun and it is a lot easier than it is running an accounting practice. But I have a greater mission. So hire an accountant. It is a big deal that you find someone who understands this industry. If they tell you that certain deductions, especially the things that I told you are not tax deductible, find another accountant. Also make sure that they include audit protection. So that's a big deal. In the event that you ever get audited, you don't want to have to pay for it. So that's one of the things that we include in every tax return. And the other is don't do your own tax return. And the reason why is, yes, it's cheaper and you get what you pay for. And at the end of the day, nobody's going to help you if you get audited. So, you know, I wouldn't attempt that. But if you do, you know, one of the things that I just learned this year, I couldn't figure it out, is TurboTax, actually you're inputting deductions and they're eliminating them. So they're not allowing you certain deductions. I didn't know that until just recently. So tracking your expenses is a huge deal. And I will send over to Karen and Kelly just some links for you guys to download for an accounting software. I will tell you that it's very important that if you were to get audited, that you had an accounting software, not an Excel spreadsheet, not a ledger that you write on. You need to have some sort of accounting software. So, you know, auditors are lazy and they want things to be super simple. And in essence, that's what I'm telling you. So the only audit I've ever dealt with, they had a ledger. We had to go back and input everything into QuickBooks and provide them with that. And they disallowed everything to begin with. We added it all into QuickBooks, provided them the information, the P&L and the balance sheet, and they allowed them back. So, you know, what I want for you guys is for you to share this with everyone, because you can completely impact someone's life by helping them save a couple $100 a month. You know, I used to call my team when they would not pay their bill, you know, and I was like, you know, hey, look, you want to spend $100 on you, or you want to spend $400 on the IRS? Like, because that's your decision here. It truly is. Like, you're either going to spend $100 on your auto ship this month for you to have a better life, or you're telling the IRS you're no longer in business and now you owe an additional $400 to $700 a month. Which one you want? I mean, it doesn't matter to me. So here's my book. I actually super excited. I'll just share with you this, is that I just launched my second book. It is available. We just actually got the shipment yesterday. It's called What's Your Plan B? And why you would be brain dead not to own a home-based business. So I specifically created it for the network marketing industry to help them it's a prospecting tool. It is also to help you understand how amazing this industry truly is and what I think about it from an accountant's perspective, from an outside perspective. So if you're looking for an accountant, or if you want to reach out to us, we do something called tax strategy sessions. That is the only way to get through my office. You cannot call us and you cannot call us and say, hey, I want you to do our taxes. You have to go through a tax strategy session, because it's my job to make sure that we are doing everything in our power to free up money for you. So we want to make sure your deductions are correct. We want to make sure your structure is set up properly. We want to make sure you're not overpaying yourself in a paycheck. For those of you that have a corporate return. And so, you know, that's the way in. So you can book a tax strategy session if you want. The whole purpose is just to provide the content. And one of the other things too, Karen, and you guys can take a picture, you're welcome to reach out. But one of the other things is I have this webinar recorded, and this professionally recorded, and I can send it to you, and you can share it with everyone as well if they want to share it with their organization and their team. So, you know, I know it's very valuable. I know if I had known, if I'd have been able to put this together in a presentation while I was in network marketing, I'd probably still be in network marketing, because I would have ammunition. You know, what I did is I would take the book, Lower Your Taxes Big Time, and the first chapter of that book from Sandy was literally, it said, why you be brain dead not to own a home-based business if you don't already own one. And so I was able to take that and condense his 800-page book and put it into 120 pages and make it easier for people to understand. And so to simplify that. So that's all I got. If you got any questions, I'll be glad to answer them.
Well, I have one comment. Everybody needs to buy both of these books. And secondly, they're a tax write-off.
Yes, they are. Thank you.
That was absolutely amazing, Courtney. Does anybody have, I don't want to take Courtney's time, is so valuable, and she's been so gracious. She's given us over an hour of her life already. Is there anybody that has anything that is like, you know, an earth-moving question that they need to ask? Or are we able to say, thank you, Courtney. Thank you, Courtney. Because this, guys, this is not only going to help you recruit new people to your business. This is going to help you go back to the 100 of dead wood in your company and your downline and say, hey, by the way, did you use this as a tax write-off? Let me share a video with you. Let me share this with you. Guys, this is gold. This is candy. This is awesome.
Hi, Courtney. Hi, Courtney. I met you in Vegas.
Oh, yes, I remember. How are you?
Honey. I have used what you said when I heard you speak at Eric Quarries, and it's definitely helped me recruit a lot of people. I always bring up the tax information. So I just had a quick question. So I know if they're under 18, I heard what you said about the pay. What if they're in college? Because I believe if they're full-time, there's a certain amount of income they can make without tax deductions. Do you have any advice on that as far as when they're in college?
So if they're over 18, you just have to withhold FICA, and you have to kind of compare, is it cheaper to pay the 15.3% because they pay 7.65, you pay 7.65, and then, or your tax bracket. So you're pushing off income and you're not having to pay federal and state taxes on it. Now, when they hit 20, you can actually give them, you could pay them, plus you could give them, a college fund for fringe benefits. So $52.50 a year, you could provide them free. They don't have to pay taxes on it. You don't have to pay taxes on it as well. So there's so many things, guys. Like, I've never paid taxes in 19 years. Legitimately, morally, and ethically. And I say that, you know, cautiously, because people don't understand it. But when you understand that I'm generating economy, I create jobs every single day. Why in the world, if I made money and had to pay the same taxes as a W-2 employee, then there would not be any jobs. Okay. And when you understand that, like, you know, especially with what's happened now, it starts to make sense. And I'm going to share this one last thing with you guys, just because I think it is so powerful for you to go back and share with someone. There's a website, some of you may have seen it. It's called the US Debt Clock. And I want you to see this number right here. 80,000. This is the debt. This is a national debt per citizen is $80,000. It was 67,000 in March. It's a big deal. This is a major problem. And you have the ability to help people. What they don't realize, and that's per citizen, that is every man, woman, and child. You see the debt per taxpayer, okay? You see over here, the unemployed is $26 million. And this never stops. These numbers never stop changing. They never stop moving. The average credit card debt is $6,100. The average student loan debt is $38,000. And you have something in your hand that can completely and utterly change someone's life. So, you know, it is your responsibility that now that you know this information, and now that you know that you truly can help every single person that sees this, whether they make money or not, you can help them. You can change the history of their financial future just by teaching them and educating the information. And whether they get it or not, it's not your problem. It is your responsibility to share it. So there you go.
Thank you so much, Courtney. You're fantastic. Appreciate all the information.
You know, guys, honestly, Courtney just taught us how to literally change the trajectory of the lives of everybody that we know.
Yeah.
How do you say thank you to that? Graciously, Courtney, thank you.
You guys are welcome. If I can do anything else for you, you let me know. I'll have my staff, if you want to reach out, Karen, they'll send you those links, and for the book and also the webinar. And
and I need your information to also see if you can talk on our corporate, they're really excited. That would be fabulous. And
Yep.
right here, you know, there's a few of us, but that you'll reach thousands at that. So that would be awesome.
I'm all about that's, you know, I started off speaking because I needed money. Now I speak because, you know, I need to change lives. So this is,
Right.
it's crazy. And guys, one of the things I do want to share with you guys, I used to think when I was in network marketing, I'm like, you know, if these people are really making all this money, why in the world are they still running their mouth and talking and going to all these things? What happens is you get to a point, where the money doesn't matter anymore. The money the impact. And so I want to share that with you. Like, if you see somebody running, like, I don't work anymore for money. I mean, like, I could have stopped working 2 years ago and my business would work on its own. But the thing is that I can't stop because
You really need to hear this.
help people. So I just wanted to share that. So y'all have an amazing day. I'm going back to business mastery.
Thank you so much, Courtney.
you.
We appreciate you. You're amazing. Thank you.
Thank
so
you,
much.
Courtney.
Thank you.
That was a
very
great
much.
hour. Thank you so much.
You.
Thank you.
Was that the best ever?
That was phenomenal.
Oh my goodness. Okay, so I'm going to get that recording from her, and I'm going to get the software options that she has, and I'll make sure to pass that on. And I was taking notes. I don't know about you guys. I'm taking screenshots, but like everybody needs to see this. Oh my gosh, we only had 40-something people on. The whole company needs to see this. Hopefully, she'll be able to do our convention. So thank you, Kelly.
Let me tell you what I do. So let's say I have, for instance, sometimes you're going to have a customer sign up, but they take a distributor spot because
We can't hear you.
price or either from Canada, but they
Sorry. I just said this is absolutely amazing because to having her on, you can recognize every single person that you talk to, you can help, not just physically with their overall health, but financially. And the government's been screwing us for years. And it's, you know, we can right now with what we know, we can change the trajectory of so many people's lives, guys. And you know, go back to the people. Hold on, there's somebody. Maggie. I'm gonna mute Maggie if I can find her. I can't find her. All right. Anyway, Maggie's Wildy's TV is in the back. Sorry, but this is great because guys, we can go back to every single person that is in our downline, and we can say, "Hey guys, you know, did you just remember you have a huge tax write-off?" And they go, "Well, what do you mean?" Well, when you were in our business, you have a huge tax write-off. I gotta find Maggie's thing here. She's not
Just
showing up.
mute all, Kelly. Just mute all.
Okay. Mute all. Okay, you guys can hear me? So guys, this is huge because you can go back to every single person in your downline and you can say, hey, don't forget to write off last year. You were in this business. And they go, well, what do you mean? Well, there's huge tax write-offs. And they're going to say, well, what do you mean? Say, I'm going to send you a video. It'll explain everything, but it'll save you thousands of dollars. Would you watch an hour-long video to save you thousands of dollars on your taxes? Of course they're going to say yes, especially when it gets closer to tax season and they got to pay. So this is a huge tool. It is recorded. I'm going to end it and let everybody go about their business. Karen Romero, thank you so very much for introducing us to the wonderful Courtney Epp, and to the rest of you, love you. Bye, guys.
Thank you. Thank you.
Thank you, Kelly.
Thank you,
Karen.
guys. Thank you, Karen. Bye.